In this video we are going to talk about dividend aristocrats with high yields. So before starting this video, please like this video and subscribe to this channel for our future updates. Dividend aristocrats are companies that have been included in the S&P Wink with tongue sticking out 500 and have increased their dividends on an annual basis for at least 25 years in a row. In light of the uncertain state of the macroeconomy, dividend stocks have been definitively categorized as efficient inflation hedges. Large corporations are better able to withstand the effects of inflationary pressure and may even gain from increased pricing. This enables them to maintain their dividend payments to their shareholders. As long as inflation remains at its current level, corporations will continue to react to the new market dynamics, which will result in an increase in revenue, earnings, and dividends over the short and long terms. Coca-Cola, KO. Due to the fact that it owns or has licenses for more than 500 different non-alcoholic brands, Coca-Cola is the largest beverage corporation in the world. Since its establishment in 1886, the corporation has expanded its operations to more than 200 nations across the globe. Its brands are responsible for around 2 billion servings of beverages consumed daily across the globe, which results in approximately $42 billion in yearly sales. On April 25, 2022, Coca-Cola released its earnings for the first quarter of the year, and both its profitability and its revenue handily above forecasts. The adjusted earnings per share came in at 64 cents, which was 6 cents higher than what was expected. The revenue came in at $10.5 billion, which was over 17% higher than the previous year's total and was $670 million more than what was anticipated. The growth in revenue of 16% was accomplished through an increase of 7% in pricing and mix, as well as an increase of 11% in the volume of concentrate sold. During the last quarter, Coca-Cola said that it increased its market share in terms of volume in both the at-home and away-from-home channels. During the period under review, the unit case volume increased by 8%, with growth being seen across the board in all of the operational segments. The management stated that results were assisted by removing the impact of the pandemic from the results of the previous year, and this was seen to contribute to the growth that was witnessed in both developed and developing markets. The operating margin came in at 32.5% of revenue, representing a significant increase from the previous year's figure of 30.2%. Strong growth in sales was the primary contributor to the gain, which was slightly offset by an increase in marketing investments in comparison to the previous year. In addition, the margins were negatively impacted by the acquisition of Body Armor as well as currency translation. Medtronic plc, MDT. The amount of biomedical devices and implantable technologies that Medtronic produces makes it the largest manufacturer in the world. The corporation has about 90,000 workers and operates in more than 150 countries, providing services to patients, hospitals, and clinicians. Cardiovascular, medical surgical, neuroscience, and diabetes are the companies for business divisions that it operates under. For the past 45 years in a row, Medtronic has increased its dividend payment. In the most recent fiscal year, the corporation posted revenue of $32 billion. Medtronic increased its dividend to 68 cents per share in May 2022, marking the 45th year in a row that the firm had increased its payout. Late in the month of May, on May 26, Medtronic announced the company's financial results for the company's fourth quarter of the fiscal year 2022. As a result of disruptions in the supply chain, particularly in surgical innovations, and lockdowns in China, organic revenue increased by only 1% compared to the same quarter of the previous year. As a result of these headwinds, adjusted earnings were flat, and adjusted earnings per share climbed by only 2%, from $1.49 to $1.52, which caused them to fall short of the consensus estimate of analysts by 4 cents. Chevron Corporation, CVX. It is the third largest oil major in the world, and its name is Chevron. In 2021, Chevron's upstream business was responsible for generating 84% of the company's total earnings. Over the course of the past 40 years and counting, the dividend has seen annual increases. Late in the month of April, on April 29, Chevron announced the company's financial results for the first quarter of the fiscal year 2022. It dropped its production by -2% compared to the same quarter of the previous year, but it gained enormously from the surge of oil and gas prices to 13-year highs, which was the result of Western countries imposing sanctions on Russia for its invasion in Ukraine. As a consequence of this, the oil major had a sequential growth in its adjusted earnings per share of 31%, from $2.56 to $3.36, which is very close to an all-time record. Because we do not anticipate that the sanctions will be lifted anytime soon, we anticipate that oil and gas prices will stay exorbitant this year. As a result, we have increased our projection for Chevron's annual earnings per share from $9.90, which was our projection before the war, to $16.40. Essex Property Trust, ESS. In 1971, Essex Property Trust was established as a company. The trust makes investments in multifamily residential buildings located on the West Coast. These properties include apartment communities and a few other select properties. The trust is involved in the development, redevelopment, maintenance, and acquisition of these properties. In excess of 60,000 apartment homes are part of Essex's holdings, and the company has ownership stakes in several hundred residential developments. The trust is responsible for around $1.6 billion in annual income and has a workforce of approximately 1,800 people. The results of the first quarter were announced by 2022 Essex on April 26. The fundamental funds from operations per diluted share reached $3.37, up 9.8% from $3.07 in the prior year. The total FFO per diluted share was $3.36, representing a 4% rise over the prior year period's level of $3.23. The gain on sale that was reported in the prior year quarter was the primary contributor to the fall in net income, which came in at $1.12 per share. Both same-property gross revenue and same-property net operating income saw year-over-year growth of 7.3%. Same-property gross revenue climbed by 6.5%. Consolidated Edison, ED. Holding company Consolidated Edison provides its clients in New York City and Westchester County with electricity, natural gas, and steam. The corporation is also involved in the distribution of natural gas. It brings in close to $13 billion every single year in revenue. Consolidated Edison reported its financial results for the first quarter of 2022 on May 5, 2022. The first quarter ended on March 31, 2022. The increase in revenue was 10.3%, coming in at $4.1 billion and exceeding projections by $350 million. Adjusted earnings of $522 million, or $1.47 per share, in comparison to adjusted earnings of $491 million, or $1.44 per share, in the prior year. The adjusted earnings per share came in at 1 cent less than what was anticipated. The company's New York operations gained 8 cents as a result of higher rate bases for gas and electric customers, and they gained 4 cents as a result of the recovery of late payments. Results increased by 8 cents due to an increase in revenue generated by the company's sustainable energy sector. Consolidated Edison anticipates making capital investments totaling almost $16 billion between the years 2022 and 2024. Of this amount, $4.7 billion will be allocated to projects related to green energy, including smart systems and electric cars. Rate hikes have been a primary factor contributing to Consolidated Edison's expansion. The Clorox Company, CLX. The Clorox Company is a maker and marketer of consumer and professional products, encompassing a wide variety of categories such as charcoal, cleaning supplies, and salad dressing. These products may be found in homes all over the world. Clorox is able to generate more than $7 billion in annual revenue thanks in large part to the fact that more than 80% of its sales come from goods that rank either first or second in their respective categories across the world. On May 2, 2022, Clorox announced its earnings for the third quarter, and the results were better than expected on both the top and bottom lines. The company's adjusted profits per share came in at $1.31, which was 35 cents higher than what was anticipated. The revenue came in at $1.8 billion, which was somewhat more than the previous year and around $10 million above than projections. The improvement in net sales was due to an increase in shipments across all reporting sectors, while organic sales showed a 2% increase. The business said that the average growth rate for net sales over the previous 3 years was 5%, however, this time period includes the significant increase in revenue from COVID. What do you think of our video? Let me know in the comments section below. If you enjoyed this video and want to hear from me again, be sure to hit that subscribe button before you go. Thanks for watching.